think you need to find your sort of personal passion within the industry, and then everything will become easier. So when you go and have a discussion with capital or your banks or whoever it is around something that you can obviously be seen to be sort of deeply engaged and passionate about, it just makes everything so much easier.
You are listening to the Property Developer Podcast, your home for tips, ideas and inspiration to help take your developing to the next level. Now here's your host, Justin Getty.
Hello and welcome to episode 69 of the show. Thanks for joining me. How are you doing? Staying safe, I trust. I'm well. Been enjoying a bit more social freedom as we slowly ease up the COVID lockdown across Australia. I've also been very busy for the past few weeks. Lots going on with my projects. We started demolition on one of them, which is exciting. I posted a short video on the show's Insta and Facebook pages if you want to check out how it's going. After years of battling away, it's been nice to see some action on site and start seeing the dream become a reality. Still, a bit of work to do to get the builder on site for the initial site works, so I've been busy sorting out some loose ends to ensure we don't have any delays. It'll be interesting to see what happens with the property market over the next 6 to 12 months, with lots of speculation around large stimulus measures for the industry, which will be exciting if some of those initiatives get off the ground. If you have been using this time to ponder your future and reflect on what you'd love to be doing, and realised you want to get into property developing, don't forget we have the mentoring program to help you get started into a career of safe and profitable developing. If you'd like to find out more, then email me, justin@propertydeveloperpodcast.com for further info. Okay, let's get on to today's guest, Kris Daff. Kris is pursuing a large-scale built-to-rent/sell model, and he has an interesting story to share about how he is going about it. There's been a lot of talk about build-to-rent in Australia, so I was very interested to hear how Kris was approaching the challenge. During this conversation, we cover how Kris started out as an engineer and then morphed into a property developer, how he was looking for a different outcome with his projects and turned to helping people buy their homes through an alternative approach. We also talk about the different challenges that these types of projects present. Keep an ear out for how the financial feasibility and funding differs from a more traditional built-to-sell project. I think you'll enjoy this discussion, and I started off by asking Kris what food he would eat until he was sick.
For me, I've got a pretty simple palate. It would be eggs in some format. That's about as extravagant as I get, I think.
Well, with some sort of sauce or an omelette or just plain boiled eggs?
Some fried eggs with sriracha sauce on toast would be good for me. So
there's a bit of spice and flavour there.
Yeah, so I eat so much pasta with butter and cheese with my 5-year-old and 1-year-old that the sort of simple things that seem to be the way of our household. So
oh yes, it's funny when you've got kids and you go back to eating quite simple food, and as they get older you can start mixing it up a little bit more.
Yeah, well, Poppy, our 5-year-old, picks dinner on Sunday nights for family dinner, and I could pretty safely go to the supermarket on every occasion and buy a packet of pasta and some butter and cheese and know that that's what she'd be picking for dinner on the night that she gets to pick dinner. So there's not too much variety, but yeah.
That's okay. I come from the school of thought that says butter and cheese on anything usually makes it all pretty good.
It's a safe bet.
All right, Kris, we're here today to talk about developing, and you've got an interesting story to tell around a sort of built-to-rent model. But can you give us a bit of a background about how you got into developing, the projects you've done, all those sort of basics?
Yeah, sure. So I guess by training, civil structural engineer, also have a degree in geology or a degree in science with a major in geology. So I did that at Melbourne Uni after growing up on Phillip Island and going to high school down there. And then out of that I sort of did some consulting engineering for a little while and sort of wasn't so fond of the desk life. And got into the sort of project management side of civil and structural engineering, and ended up sort of transitioning out of that, and just on by a bit of chance really took the opportunity to take up a position at Melbourne Docklands Authority at the time. So that was in the very early days of Docklands, when our office was in AFL House, which is just on the sort of water side of Marvel Stadium there. And there really wasn't much else down there at the time when I started in the sort of mid-2000s. And that was a very interesting time. So there was a lot of sort of big transactions happening down there, and as the sort of government's agency responsible for the delivery of the country's largest urban renewal project at the time, we got a lot of contact as quite young operators, young professionals with the sort of heavy hitters in the development industry. So, we were working with the sort of bosses of Lendlease and Mirvac and MAB Corporation and Leighton Properties at the time, and you sort of name it, they were all down there vying for their sort of slice of Docklands. And that was very rare time and very sort of special time for me to sort of observe sort of what development was really about, and particularly the largest sort of master plan precincts, and gave me a very deep network for someone in their sort of mid-20s to sort of, I guess, leverage in the future, and sort of rare contact for someone at my age to have that sort of engagement with such senior industry leaders. And through that, I forged a sort of friendship with Ashley Williams, who was the project director for New Quay, which was one of the projects down there, which has been developed by Michael Andrew Buxton by MAB. And we had sort of formed a good relationship. And initially the relationship was one where we were sort of on opposite sides of the table. I was responsible for the management of his precinct and our contract with MAB, and he was obviously sitting on the developer side of that relationship. And, it was sort of, full of sort of positive engagement and confrontation and, a whole bunch of things that go in these sort of complex projects. But we formed a very good bond, and I think good sort of healthy respect for each other, and had sort of resolved at one point towards the end of my sort of tenure at Docklands that it would be good to do something together in the future. And Ashley was a bit older than me, so he sort of went off and pursued that a bit earlier than I was ready to, and got into partnership with Ron Walker at the time and formed Evolve Development. And then a couple of years after they'd sort of got started, I came on board and as a director and partner in that business, and helped with the sort of acquisition velocity for that business of new projects and the like, and had a really good experience there. So I spent, almost 10 years there, and we developed a whole bunch of really good projects. So it was a pretty even mix between inner city apartment type projects, all off the plan stuff, which was the norm at the time. Projects varying in size between sort of 50 and 400 apartments, and then some large scale urban renewal, those sort of greenfields projects on Melbourne's fringe. So that was a sort of land subdivision type projects, and we had thousands of lots that we were delivering towards the end of my time there. And then I had a sort of view on where I sort of saw the industry heading, and the sort of things that I wanted to pursue. And, at the time, that didn't necessarily sort of suit where Ron and Ashley wanted to head at this stage in their careers and lives. So we resolved that over quite a long workout period that I was going to sort of move on and establish a new platform to separate from those guys to pursue large-scale urban renewal projects, and at that time I wasn't thinking about build-to-rent. The origins of the sort of build-to-rent part of the business came later, but projects where I could leverage some of the skills that I had in managing sort of highly politicised and controversial planning process, like rezoning middle ring industrial land for alternate use. And then also some of the sort of capital relationships that I had for people that were interested in investing in that sort of longer term, with that sort of longer term approach to sort of value creation over time. And me also recognising that at the time there was a lot of offshore capital coming into off the plan projects and the like, and the metrics that those businesses were using to evaluate development opportunity were different to the sort of metrics that I would use, and that basically, bottom line of that meant that I was uncompetitive in competing with them in the acquisition of more sort of ready to go, ready to develop sites. So I sort of had to move further up the sort of planning risk curve and other things, and so, well, I'll take on some risk that I'm comfortable to manage to build a bigger portfolio over time, and I don't need to sort of be the sort of megalomaniac that needs to have sort of 10 cranes up in the first year of operation. We'll take a sort of more patient approach to development, and ultimately end up with a large portfolio of projects, but we'll do that in a sort of orderly way and sort of add value by some of the skills that are probably unique to myself and the business. So that was sort of the journey, and it's been terrific actually. I'm sort of the envy of some of my friends in the fact that I love to get out of bed and go to work. Whereas some of the others are, I've sort of got friends that sort of maybe struggle a bit more with that. So, my wife has to convince me to go on holidays each year and the like. So it's good fun.
And so what projects did you start out with, and what have you delivered any? What ones have been completed?
So we delivered a very small project in context of sort of what we do now. So done a small townhouse project in, under the new umbrella in South Yarra, which was sort of $25-30 million worth of townhouses. That was all sort of a very conventional off the plan type model. And that was probably the project that sort of got me worried to start with, that I wasn't sure how I was going to sort of continue to sort of do development in the traditional way, based on the basis that we were selling these townhouses to sort of investors and sort of whoever would really turn up and pay a 10% deposit, I guess, like the conventional sort of off the plan model. And I really sort of checked out of that process, and had sort of lost interest and drive to participate in that format of a sales process, which is basically, sort of selling something to someone off the plan and getting them to sign a contract, and in most instances never really seeing them again until they turn up at your solicitor's office and provide you a bigger check at settlement time, and then you sort of move on to the next project, and probably don't really sort of stay in touch. And it's sort of that sort of soulless and sort of faceless sort of developer approach was something that sort of was bothering me a little bit, and the thing that was sort of heightening my sort of anxiety in that regard was we had been off and acquired a very large pipeline of projects. So we bought 11 acres of industrial land in the inner southeast in Melbourne that was ultimately going to be a project comprising probably 1,000 plus dwellings and 40 or 50,000 square metres of commercial and retail spaces. Another one in Clayton, about 2/3 as big as the first one. And so we sort of built up all this pipeline, and you sort of say to yourself, well, if you've sort of checked out of the traditional mechanism to get those projects delivered, what are some other opportunities to be able to build out that pipeline, save from just being able to have to sort of sell the site and let someone else go and do it via an off the plan method. So that sort of led to a bit of a research piece, I guess, and a bit of a sort of exploration internationally, and spent a lot of time overseas looking at what are some of the other methods that international developers and investors use to deliver housing, and on what basis do they sort of hold that housing long term. How do they sort of engage with the communities and the neighbourhoods that they're building during the phase that sort of people are living there, and how does all that sort of look and feel. So and just sort of trying to say, well, if we can find a way to sort of hold more of our real estate longer term, then for me, with an investment logic of not being particularly interested in development profit type outcomes, so I'm less interested in building 300 or 400 apartments each year and settling those and having large profit events, and much more focused on, for my group and our capital partners, of creating long-term annuity-based real estate assets, so stuff where we can generate rentals from and have less spiky development profit type revenues that are more exposed to market cycles, to have a more defensive portfolio, more linked to rental, either in residential or commercial office and the like. So clearly build to rent or multifamily housing, to use a sort of US descriptor, was an obvious opportunity for us. At the time, there were sort of others looking at it, and a lot of sort of people sort of complaining about the barriers that existed, in our sort of state or federal taxation systems, planning barriers and the like. But we'd sort of done a bunch of work on it and sort of thought we'd been able to sort of solve for some of those barriers. Thought we had models that delivered returns that were sufficient to attract institutional investment partners to our projects. Because the reality is that now we've got a portfolio of almost 4,000 apartments in Melbourne across 10 sites, is you need large tranches of capital to be able to hold that volume of housing. So the only spot where that gets housed internationally, and the only spot that build to rent will be housed domestically as the asset class emerges in Australia, will be with pension fund investment partners, so superannuation investors. So that's I guess the sort of long answer to the sort of career journey so far, and some of the sort of observations and things we've sort of made along the way. But yeah, it's
all right. Got
pretty fun.
Lots of questions for you. The first one, so if you're not doing projects for development profit, what is the financial goal? Is it the cash flow returns over time? Yeah, yield over time.
Yeah, so we're sort of very much a sort of yield investor. So we make, normally developers measure their sort of returns on a profit on cost or a equity IRR, or those sort of type of measures, traditional investment measures, which we use as well. Because we need to be able to sort of compare ourselves to other housing development options. But our investment thematic is much longer term, stable returns, more defensive returns that deliver lower annual returns than, say, an off the plan approach, but in a sort of more defensive part of the market, so exposed to residential rents rather than having to source sort of investors and other purchasers to basically buy the properties off the plan to get your projects under development. So,
and what kind of yield are you looking to get, Kris?
So we sort of, for our portfolio, which is pure sort of multifamily housing, so their assets will be owned in one line in perpetuity and will be only available for rental. We're sort of in the 6 to 8% range, and for the projects that we sell down after 5 years, so that supported pathway to ownership model, we're probably 4 to 5% above that on an annualised return. So they're materially different equity returns to what you would see in an off the plan project, where they might be targeting returns that are sort of 3 or 4 times that amount, but being an investment for 8 to 10, 12 years compared to 3 or 4 years is really the sort of big difference there, I think. So, yeah.
Yeah, and I think you've delivered one project which is build to rent. Is that right?
Yeah, it's under construction at the moment. So that's we sort of call it build to rent to own. So we own the asset in one line for 5 years. So single ownership for 5 years. And then we allow the tenants, we give them an option, and we sort of agree the price for that apartment up front to purchase their property in the 6th year. So, and we commit to them basically the point where you would sign off the plan contract. So we pre-agree what their rent will be for the 5 years they're renting off us, and we pre-agree the purchase price that they can purchase the property for at the end of that 5-year period. And that provides them with a lot of certainty in what their sort of cost of housing is going to be during the rental phase, and also gives them a sort of fixed goal to work towards in terms of the purchase price. and it gives them basically 7 years. So they get 2 years while we're building a building, and then it's about generally what these sort of buildings take to deliver, and then a 5-year lease to save up towards a deposit. So we did a lot of research on that and saying what do people find as some of the most daunting things about the housing market. And the renting bit's easy. People are used to renting. So as long as that was sort of done in a similar way to the way that you can sort of rent any other property in Australia, then people are pretty used to that. The concept of getting the right to a sort of 5-year lease term was something new for people, and for some people that was sort of almost enough in itself. So to know that they were going to be able to, as long as they kept paying their rent, stay for 5 years and not be exposed to some sort of mum and dad investor that owns the investment property they're living in at the moment, who might sell it because they need a bit of money, or move the kids into it because the kids are going to be going to uni now, or whatever it is, and kick out the tenant. Was a pretty big thing for people to say, well, you've got half a decade of tenure certainty there. And the other thing about the ownership piece that a lot of people are telling us was being exposed to market volatility, and historically the sort of way in which they just sort of continued to have this deterioration in their confidence around their ability to ever achieve home ownership. And the logic sort of is there might be an individual who's doing a very good job of tapping away at savings, and he might be sort of saved up a bit of a nest egg, but maybe not quite enough for a deposit, and then you pick up the Herald Sun, and there's another article saying that Melbourne's house prices have gone up 5% for the quarter again, and they sort of have this sort of arms in the air moment as someone who does want to be a homeowner at some point, because they may have seen the amount of financial stability that's given their parents, or and just that being something that's deeply ingrained in the Australian psyche. But they sort of have this arms in their moment. So this market's not designed for me. I went to bid on a 1-bedroom apartment in Richmond, and I got blown out of the water by 3 investors who were aggregating their sort of 10th investment property each, or whatever it is. So if we could provide someone with, say, you've got the right but not the obligation to purchase this property in 7 years' time for a fixed amount, we'll pre-agree that, and giving them that fixed goal to work towards, and supporting them with our financial coaching program and some of the other free services that we provide them to sort of help them along the way. And for people that might not be as confident with numbers, or may have never sort of thought about what a mortgage is or how to get a loan off the bank, that sort of thing, to just provide them with a bit of extra support, made the whole experience much more accessible for them. So the first project in Kensington, which I mentioned, so that's under construction as we speak, and the first residents for that will move in sort of May, June next year. So that's the first one. So that'll be delivered. We'll hold that for 5 years, and the residents will sit there and have a good life with our sort of services, and then they'll get the opportunity in the 6th year to decide whether or not they want to purchase their apartment. So,
and how does the sorry to interrupt, Kris. How does the ownership structure then work? Because you mentioned that it's all owned in one line, but what happens in that 6th year when you start to sell down? How do you separate out those units?
So we strata title with that, the building. And we may we'll strata title some of it as soon as it's finished, but the ownership of each of the individual parts of the building will be by the original developer. So
okay, and then what happens? I mean, you'll start to get a fragmentation of ownership over time, wouldn't you, in those buildings, as people start to take ownership, and then the original entity will still have some stock. What do you foresee happening over time?
So we're pretty upfront about that. So the apartments will be all individually titled. And say 3/4 of the people say, yeah, I've had a really good time living in this building. I sort of like my neighbours, and I've sort of saved up enough deposit to buy my home. So 3/4 of them will do that, and then the residue, that just for whatever reason, just some people just won't be in a position, or will decide that they don't want to purchase the apartment anymore. We'll just dispose of the residue in an orderly way on market, over a year or two post that 5-year point. So we'll never be, we're either owning the entire project, or we're out of it. So, and in the instance where we've sold down 3/4 of the homes to, the tenants that had been living there, the other 25% will just be appointing an agent, and would have moved the tenant out, and we'll be disposing of that stock on market during that 6th year after completion.
Okay, so it's you're sort of looking at a 7 to 10 year investment cycle.
Yeah, depending on how much residual stock we've got after the tenants either exercise their option to purchase or not, and and then obviously how long it takes us to get through that residual stock. So whatever the market conditions are like at the time. So
yeah, and so how many apartments was that project?
That one's only little. That's only 73.
Yeah.
And then we've got, so that's subscale for us. So we won't do another project that small, but when you're doing something new, it was a manageable scale. So that was if I'd have gone into ANZ and said, oh, we're going to sort of do something that's never been done before, and we're going to do 400 apartments in the first project, and we need 200 million, and et cetera, et cetera. They just would have gone into meltdown, so just having the conversation. So, and it was for me, I bought this site at auction for this 73 apartments, and thought, well, at least, that's a sort of manageable scale to do something else with, if we need to. But anyway, that's all sort of history now, and it has been successful, and the market's responded really positively to it. And the new projects that we've got on the books none of those are really less than 170 to 200 apartments. So to deliver the service during the tenancy phase, our build to rent sort of service offer, you need to be at a certain scale to make that economic, because the sort of on-site human resource piece that we need to manage 200 apartments is basically comparable to managing 75 apartments. So it's not a sort of linear increase to your resource needs as you increase the scale of your projects. And then we get into our sort of mega neighbourhoods, which is, like the Bentley, where we'll sort of do, say, 1,000 apartments across 10 buildings and a whole bunch of commercial spaces and hospitality spaces and the like, and that sort of next scale again. So for those projects, we'll do sort of 20% of the housing will be under the rent to own model, the home ownership pathway, and about 80% of it will just be owned for long-term affordable rental.
Okay, so how many future projects you got in the pipeline?
So we've got about 10 locations in Melbourne, about 4,000 apartments in total. So, so that's, we're sort of everywhere from Kensington, Brunswick, Coburg, Preston, Murrumbeena, Clayton, Bentley, Port Melbourne. So we're sort of all around the place, in that sort of inner middle ring. So I think there's sort of the location, sort of people ask us where we sort of like to be, and can I go and do a project in Pakenham, and because it's next to a train station, I sort of say, well, no, because in a growth area you can still rent a 3-bedroom family home for probably $450 a week. So the economics of a commercially built multi-level apartment building just can't adapt to that market setting. So why would someone pay us $380 a week for a 1-bedroom apartment when they can go and rent a 3-bedroom home for $450? You just wouldn't. So we're sort of usually located in areas where you would see conventional off-the-plan apartment developments getting underway. So it would be probably the easiest way to summarise the locations that we're moving into. But we're pulling back on the sort of acquisition, on the sort of the acquisition velocity now. So we've got a huge pipeline, and we're now really resourcing up the business into a sort of delivery phase. So I've got 30-something staff at the moment, and we'll probably have 70 to 80 by this time next year. So that's good news, and I guess that's a pretty engaged environment for our sort of staff to be in as well, to see that sort of constant growth, which is good. So our projects now range in scale between about 200 apartments up to sort of 1,000 apartments across multiple buildings on a large urban renewal site.
And so it sounds like a part of the business is the the property management side as well.
Yeah, yeah. So that's a big part of the team.
Okay. You mentioned that it can be a difficult process getting something like this through. Is it different going through planning with a different kind of model? Are there different planning considerations?
So look, there are. So I think, I think sort of local and state government in particular sort of are getting up to speed with, what's different around build-to-rent housing compared to conventional off-the-plan projects, which they're so sort of accustomed to. One of the things that I've found sort of positive in the planning space has been, to the extent you're pitching your projects at the sort of more affordable end of the rental market or the sort of purchase market, then the planning authorities generally respond in a fairly positive way to that. So we've had very good experience dealing with the City of Melbourne and City of Moreland and some of the other local governments that decide planning applications in Melbourne with our projects. And I don't think we end up with a sort of bigger building than you would if you're just doing off the plan. So we don't sort of get an extra floor or something because we're doing 70% affordable housing, but we do. I think we sort of, just the sort of style and the sort of nature of the conversation in planning is just, sort of starting from a different point than, because everyone's just got this sort of negative bias against anyone doing an off the plan apartment project that, it's just capitalism at its worst and, whatever, which is not always the case. But, and I've, over the years sort of found that there's sort of a bit of a frustration in the planning system where, it's just hard. So, but we've found it probably a bit easier, I guess is the summary. Yeah.
Okay. Yeah. Well, let's not diverge on a planning discussion and all the frustrations involved with doing that. I'll be here all day on my soapbox. You mentioned something about the tax and planning barriers. What were some of those that you identified, and how did you overcome them?
I guess so. From a taxation perspective, some of the barriers to institutionally owned rental accommodation are the ones that we often see referenced. So GST structure, at a federal level. So the Fed tax regime around GST is a barrier to the establishment of the asset class, but the state level land tax is a big cost, a big annual cost to build-to-rent developers. So, but I've got a bit of a sort of philosophy around this, and I'm a bit at odds with property council and other sort of industry advocacy groups on this, is saying, well, my research internationally, in my view, is that it would be very foolish for government at any level to start giving away tax or giving tax incentives to a certain asset class without having that asset class at least attempt to solve for some of the issues that government's facing. So internationally, there's a lot of tax concession for basically pension fund-owned housing assets, but it's always targeted and there's always something that sort of government's getting back in return for that, and typically it's in the form of some sort of discounted rental accommodation or rental accommodation that's appropriate for very low and middle income tenants. So my sort of view on that is that, if the federal government's going to talk about sort of giving away GST for commercial residential premises, and state's going to give land tax concession for build to rent, for example, then I think they need to be pushing industry to be sort of solving for some of the other issues that government's got in the delivery of those projects. So we've got some, tax structuring and other things that we use to be efficient, but the reality is you're still sort of paying the tax in the way that basically means that at some level, the sort of tenants and the purchasers need to help you deal with that burden. So, and then from a planning perspective, look, I think the issue is, and you sort of talk to some of the big international operators in multifamily housing, and it's all about sort of smaller apartments and the like. And again, I sort of maybe I'm a bit too far left for some of my sort of capitalist colleagues, but I'm still not convinced that, the reality is you can charge the same rent for a 42 square metre one-bedroom apartment as you can for a 50 square metre one-bedroom apartment, roughly. It's not materially different. So clearly if you're building something smaller and it's costing less and the rent's basically the same, then the yield's better. But then we've got these design standards for apartments in Victoria that set out a sort of minimum bedroom dimensions, living room dimensions, minimum amount of storage, etc. So the argument that a lot of operators are using are because we're providing a much higher level of communal amenity spaces, that means your apartment doesn't necessarily need to be as big. So I'm not sure that I necessarily subscribe to that. I don't know that just because you can't afford to buy a property that you should be subjected to a sort of lower level of amenity in your living environment. So, and that's sort of arguing against myself commercially a little bit, I suppose. So if they did loosen up those restrictions, then that would probably be good for us. And then, so I guess the sort of, the sort of extension of that is does government ever sort of really get its head around sort of discriminating against the renter compared to the sort of owner? And I suspect that the answer to that question is no. And an apartment, a one-bedroom apartment, should be what they've sort of determined is a one-bedroom apartment, whether you're sort of renting it or owning it or whatever. So I don't suspect we'll see a great deal of change there. What government could do, and clearly with the recovery task force and things, they're sort of in the current crisis, is provide a higher level of sort of facilitation to build-to-rent projects, for example, that are not subject to the normal pre-sales hurdles and the like that an off-the-plan project would be, particularly at the moment when, off-the-plan selling, is difficult. So to say, well, if there's projects there that aren't subject to the normal sort of constraints to commencement that other parts of the market are, and there's the ability there to get on and allow these developers to invest hundreds of millions of dollars in construction of these projects and not have to sit around for 18 months or 2 years trying to pre-sell all the apartments before that can occur, then I think it makes sense for government to give some sort of facilitated approvals to those type of projects, which is something that I know they are sort of very focused on at the moment.
Yeah, well, I wanted to ask a question around that. So, particularly with your construction funding, you generally, with a mainstream funder, they'd be looking for some high percentage of pre-sales to satisfy their risk or to de-risk the project. How do they look at this from a funding proposition and a risk proposition, or do you get rental agreements in place? Is that your sort of pre-sale?
Yeah, so under the first scenario, which is where we give people the 5-year lease and then they can purchase their apartment, we like to give people the maximum time to start saving towards the deposit. So in that instance, we pre-agree by an agreement for lease and basically an off-the-plan contract that how much rent they have to pay during the rental phase and how much they can buy their property for. In that instance, our banks like us to have about 70% of the apartments pre-committed to people that are sort of going on that journey with us. And it's not really it's not really about a security position for them because, in reality, we're just holding a rental bond. So someone that's sort of potentially more easy for someone to walk away from than a 10% deposit. Anyone moving into the building can leave after the first 12 months anyway, or 2 years or whatever. So yeah, in our circumstance, it's not really about the security position. It was more about, particularly for the first project, demonstrating that there was demand in the market for this new concept. For the build to rent, it's all about serviceability on stabilisation. So what's the net income from the asset? So the banks have been pretty sensible in accepting that there's going to be demand for high quality rental accommodation in Melbourne, medium to long term. So they're not nervous about being able to rent the apartments out as long as the rents that you're forecasting are not crazy. So they're really sizing their debt based off what's the net income from the asset. So after you've collected all your monthly rent and paid all your costs, how much of it is there available to service the bank loan? And then they'll size the debt that they make available to you based on that metric pretty much solely in our experience. So the traditional loan to value ratios and loan to costs and things are less relevant. So the big question for build to rent still is and we need transactions to demonstrate it, but where does the market realistically get set in terms of a capitalisation rate in the secondary market? So when the original developer actually wants to go and sell the asset 5 or 6 years after completion, whereas like a Chadstone shopping centre might trade at a 3% yield, do investors want to buy whole residential assets at, a building of 300 apartments in it? Does that trade at the same as Chadstone, or is it 4%, or is it tighter? So, and all we can point to is international examples, but it's so geo-specific. Like you look at a yield that if you look at North America's the best example. Like if you look at a yield on a multifamily asset in Dallas compared to New York, there might be it might be half. So, it might be sort of 3.5% to 4% in New York, and might be 7 to 8% in Dallas, for example. So pointing to, so everyone sort of points to New York and says, well, multifamily assets trade at very tight yields in New York. We say, well, is Melbourne New York? No, it's not. So is Melbourne still a strong market? Because historically we've had strong population growth, and, out the back of this crisis that's forecast to continue. So, will there be good appetite for this? Australia, with the 4th largest pension fund market in the world, got institutional investment capital domestically that would be interested in long-term, sort of long and low type investments, like housing. The answer to that's probably yes. But the reality is, the establishment of forward value on these assets is still a bit of a throw at a dartboard, to be honest.
So, Kris, you mentioned that you quite enjoyed the difficult process, or going through a difficult planning phase, or those early discussions around new projects, particularly down at Docklands. Why do you think you enjoy it? Why do you think you're good at that?
Well, whether I'm good at it or not, I'll let someone else be the judge. But the reason I enjoy it is it's like this sort of engineer's mindset. Like I sort of talk to people about this often. Engineers love a problem to solve, so that's whatever that problem is. So the ability to sort of be innovative in the creation of solutions for highly complex planning processes or commercial structures, or all those sort of type of things is something that I've always sort of been deeply sort of engaged with. And strategic planning processes and properties that are just exposed to multi-stakeholders, be they community members or politicians or whatever else, is you can create a lot of value for your organisation there, or you can also sort of erode a lot of value. So I've just found that as a sort of super fascinating space, and a space that I've always found where sort of an honest approach prevails. So if you're sort of upfront about your intentions and your sort of desires for a project and a new neighbourhood or community, and you sort of stick to your guns, and you've got some well-constructed sort of logic around that as to why it's not only good for you, but it's good for the future residents, and hopefully good for, say, existing residents in a location, that you can get through those processes in a very sort of orderly way. But the reality is that they're sort of ultra long duration processes, and for me, it created an opportunity for me to create a sort of large pipeline of projects off a sort of more limited capital base than other listed groups and the like may have, by leveraging some of those skills to create development pipeline for ourselves over time, I guess. So.
All right. And you also mentioned that you were dealing with that big end of town, and so those larger developers, and you learned a lot from them. What was it that you'd say you learnt from them that you've since applied or used in your future projects?
I think self-belief. So there was a lot of self-confidence in some of those groups, and some of those individuals. So. That doesn't mean it wasn't sort of ego or arrogance. It was just a sort of a sort of very high level of sort of conviction to where they were heading and where their organisation was heading and where their projects were heading. So, and I've found that you can sort of carry a lot of people and sort of create a lot of sort of energy around what you're doing if you can demonstrate that to people, that you deeply, deeply believe in what you're doing is the right thing to be doing for whatever reason, be that for some commercial reason, some social reason, some environmental reason, some whatever. So that sort of sole, sort of non-distracted focus, that sort of laser focus has been something that I've always been a sort of big advocate for as a sort of an approach. So no fluff, no nothing. This is what we're doing. This is the direction that we're going to head in. It won't always be smooth, but we'll get there in the end. So, and I found that those teams, and the individuals running those sort of very large projects, multi-$100 million, billion-dollar type projects, always had an extremely strong, well-established vision of what they were doing there that they very rarely wavered from.
And so what would you say your strong vision is then?
To build a large portfolio of social and affordable housing that provides a sort of deep social and environmental impact in this city and other cities nationally, and whilst delivering sort of stable, defensive investment returns to our institutional capital partners. So, and through that, and through the sort of aggregate of all of those things, providing long tenure housing for the Victorians that sort of need it most. So if I look at it in May 2020, I say, well, perhaps it's never been more important for us to be looking after the sort of people, or at least have sort of had it emerge as, say, in a crisis, or the people that look after us as a community. So, and I don't sort of feel like right at the moment today it's me as a sort of community sort of focused property developer. It's the sort of nurses and emergency services workers and everything else, and they're the people that we're sort of most focused on housing, the true essential workers. So that's the sort of vision, is to provide fair housing options for as many Australians as possible, so who find housing difficult. So
thank you. That has just prompted me for the question I was going to ask you. And so, having said that, who is how would you sort of describe the people that have taken up lease options or lease to buy or rent to buy options in the project that you've got underway at the moment?
So it's a pretty mixed demographic. So we've got we sort of had a hypothesis going in, and we thought that most people would be 20 to 40-year-old aspiring homeowners, sort of young professionals, maybe some people with young children and the like. And on the whole, that was sort of proved to be correct. So they're very engaged socially, very engaged environmentally. They're very well informed. They understand property development, understanding what housing could be and should be, and they're probably a bit frustrated with what the market's been delivering them. So that was one group, and the group that emerged, which is obvious in hindsight, it's the sort of over 55, over 60 group with a lot of single person households coming out of that group who were interested in living in a community where they felt like perhaps their neighbour had their back, or they could call on them for assistance for whatever reason, but weren't ready to move into some other sort of form of accommodation. So the idea of having people that were in this building for the long haul and wanted to get to know their neighbours and engage with each other was something that was very appealing to sort of older demographic as well. So
interesting. And do you see you branching out into other states?
Yeah, so we're in due diligence on a site in Brisbane at the moment. We'll announce a project in Sydney this year. So we're very, there's some really good work around from Ahuri and some other organisations on investment pacing into different geographies at what rate. So we're sort of East Coast centric for the obvious reasons. And then I think opportunistically, but probably via a sort of partnership-based approach, we may move into some other capital cities. But we're also sort of very focused on having a sort of orderly growth. So to sort of stick to our knitting in Melbourne and establish a platform and do some things well and deliver some good neighbourhoods, good communities, and make sure that our residents are happy, because they're really the sort of future of our brand, is to have people that tell us they're having a better life in an assembled building than where they had been previously, or their other option that they had around the corner. So we need to make sure that we've got the business right, and then we'll sort of look to expand over time. So we're not in a rush to do so.
And when you were going through planning, did you find you were getting a lot of community resistance or objection despite the promise of a more community-focused building?
Yeah, so it doesn't matter what you're doing. Your building's always too tall and there's not enough car parking. So it's like, it's the ultimate, I love what you're doing. I'm so supportive of the whole concept, but just not in my backyard. So I'm like, because, I don't want too many cars parked out the front of my house or whatever. So anyway, so that was interesting. Like, we had a lot of objections to the first project. So, over 40, I think, which is, for a relatively modest development proposal, I thought that was quite a lot, given that we're sort of situated in a sort of remnant light industrial area as well, with not many residential neighbours. But to their credit, the Future Melbourne Committee, which comprises all the councillors and the sort of mayor and the City of Melbourne, gave their unanimous support to our proposals. But the City of Melbourne in particular is a very progressive part of local government. So I don't think we get any sort of favours from the community. And I think, that's probably fair enough. I think over time, as we do more and more, and we've got more and more of our sort of terrific little neighbourhoods sort of here, there and everywhere around Melbourne, and the brand sort of develops and, gets sort of maybe a bit better known to the public, that'll make it a bit easier. I think there's still the scepticism of, sure, you're promising to do all this sort of great, sort of hyper-engaged, fairer housing, but really, we think you're just sort of a property developer sort of masquerading as, a sort of do-gooder or something. So there's a bit of natural scepticism, I think, and that's probably something that's fair enough. There have been plenty of examples of developers probably promising incumbent communities the world and maybe not always delivering on that promise, and there's probably been examples too where developers have sort of promised something and given communities more. But I think there's just that sort of inherent sort of mistrust of the industry, which I think on the whole is pretty unfair, to be honest. I think most developers do a pretty good job. So.
And I'm curious to know what the biggest challenge or obstacle or pickle that you've found yourself in that you've ever had to face in a development project, and how you managed to work around it or get it solved.
The biggest challenge I've faced in a development project, or the sort of formation of a development business, is how hard it's been to get this assemble platform up and going. So from a few respects, I think the fact that we're not sort of Mirvac, we're not a big sort of listed development group, for example, has meant I've had to sort of forward load a lot of resource into the business. So I've had to have the operations team, have the asset management team, have the community development programmers, have the service design team. And so building up a lot of this sort of non-core development resource has been a very big challenge for us. But, it's never been insurmountable. It's just sort of taken longer and sort of cost more than, I sort of ever thought it would. So, and then to, I guess, convince, a sort of group of very engaged future residents of your sort of bona fides, and has been a big challenge also. So, and I think we'll just overcome that by that sort of unwavering commitment to the organisation's sort of purpose to provide fairer housing options to Australians. So, and I get a lot of people, and I say this quite often, that, in the team that have helped get us through some of those challenges that work here and sort of believe in what we're doing, and there wouldn't be a chance in hell they'd work at any sort of normal conventional developer's business. So, and our offer's a lot richer as a result of that. So we've got a lot of people that add a lot of value outside the traditional sort of development space to our sort of future resident experience and the like, that only work here because they believe that what we're doing is going to be a sort of better housing option for a lot of Australians in the future.
Well, hopefully you manage to achieve that. But for developers that are sitting out there listening to you and thinking, that all sounds great, I'd really like to get bigger and better, what would your advice be for how they can take their business to the next level?
Well, I don't know if bigger is better or not. Bigger, I think, allows you to, and as we're sort of continuing to grow, it's sort of allowing us to do more and more, and I guess sort of explore a lot more things. I guess my sort of main piece of advice to anyone would be, I was very lucky to find a part of the development industry that I was super engaged in, and the investigation and sort of delivery of more affordable and fairer housing options was the focus for me. But I've got mates that deliver high-end residential, multi-million-dollar apartments, and that they're just as focused and engaged and happy to get out of bed to go and do that each day as I am to sort of do what I do. So I think you need to find your sort of personal passion within the industry, and then everything will become easier. So when you go and have a discussion with capital or your banks or whoever it is around something that you can obviously be seen to be sort of deeply engaged and passionate about, it just makes everything so much easier. So, and if they ever, in my experience, if investors ever feel like it's just about the commercials, it's just about the profit, it's just about sort of, the capitalist elements, and there's no real sort of personal passion for the asset class or the market segment or whatever you're in, then it's significantly harder, so if not impossible. So it's, I guess the advice is to find what part of the industry you're truly passionate about, and then focus on nothing else but that.
And so where do you look for inspiration, or how do you work on always improving, Kris?
A fair bit of it's travel, so I try to go to, well, I don't try to, I've obviously had to cancel my trips this year, but every year for the past 5 or 6 years I've done North America and Europe, looking at basically multifamily. So the lessons have been, so the asset class lessons and the investment lessons in built-to-rent housing have really come from North America. The approach to community and a sort of more sort of wholesome, sort of organic, non-embellished life has really come from Europe. So I've spent just a lot of time researching and staying in and sort of observing and how it's done internationally. So and then tried to apply those learnings to the Melbourne context, which has got its own nuances as well. So that's been the sort of key piece, and then having extremely sort of talented advisors assisting, I think, is the other big sort of piece of the puzzle.
What kind of advisors are you referring to, Kris?
All the boring ones, tax, law, but the not boring ones, the architects, those type of key advisors. There's sort of having, when you're talking about developing large tranches of rental housing, built-to-rent housing, having the best advisors in tax and finance and the law and everything else is just a given, because the amounts of money that you're talking about to sort of hold these assets are so large. And then I think the commitment to sort of architectural sort of design quality and build quality and the likes, the focus is different. So when you're selling someone to something off the plan, basically they're taking the baton for that project from the day it's completed. And, if it's sort of cold in winter and warm in summer, it's sort of more the purchaser's problem or the sort of person who's renting it off that mum and dad investor's problem, where our focus on design quality and build quality is sort of unwavering. And that's just, it's not just, it's sort of a bit to do with the result that we've got to hold these assets ultra long term. And I'm not saying that all off the plan developers, deliver crummy products. They don't need to worry about it. Like most developers do a very good job. So, it's just a different approach. We're saying we want to own this thing for 10 or 20 years and we want it to look better in 5 or 10 years after it's finished than the day it was finished. So, and I think using high quality sort of designers and builders and the like is a sort of good way to achieve that outcome.
Very good. Well, if people are interested in finding out more about your projects or about you, Kris, or the business, where should they head?
So I guess about the projects and the business, assemblecommunities.com is probably the easiest spot to start. And if anyone wants to learn more about me, when all this is over and back to normal, pop into the office in Richmond, and I'm hanging around most days, so we can just have a chat.
Yeah, I think we're all looking forward to getting back and actually being able to meet people face to face. But
yeah,
it's been great talking with you, Kris. Really appreciate the time, and it sounds like you're on a really interesting journey and up to some really fantastic things with your project, and I wish you all the best. I hope they come together for you and, more importantly, for the people that are going to live there in the future.
Yeah, exactly. Thanks, Justin. It's been great.
All right. Thanks, Kris. See you later.
Cheers, bye.
Okay, there you go. What an interesting journey Kris is on. I admire how Kris is trying to do something different and offering people an alternative path into home ownership. I like it. Here are a couple of other things I took out of my chat with Kris. 1. Don't be afraid to pursue a different path. I enjoyed how Kris wasn't feeling fulfilled by the standard developing model and wanted to find a deeper connection with his projects and buyers, so he changed course and pursued a different option. So, are you feeling fulfilled with the model you are implementing? Could you find a different developing challenge to excite you? 2. How can you make life better for your future buyers? Further to Kris's efforts to generate a deeper engagement with buyers, he's explored ways of helping people attain home ownership, looked at how to create communities within projects, and make life a little better for the people who live in the buildings. Perhaps there are some additional ways you could improve your projects to make life a little better for the final residents. 3. Can you develop a business model that scales? Kris is trying to create a model that will scale so that he can create more places for people to live in and one day own. Scaling in the property development game always brings challenges, but that's why we do it, right? So, are there ways you can scale what you are doing in an orderly way while improving how you do it? Alright, if you enjoyed that chat with Kris, then you might want to go back and have a listen to my chat with developers Olivia Christie and Sonia Miller, who are running a business that provides consulting services to institutional developers, but they are also in the process of delivering their own development project of a luxury apartment block. They had this advice about making decisions.
Sometimes you'll always look for the reason why something's not right and why things are being, and that stifles decision making. So don't let those sort of negative things. You've just got to be very measured and look at things on balance and make an informed decision. If you try to look at all the negatives and you procrastinate over things, then that's just as bad as not making decisions, making a bad decision. So as you say, just make a decision. Consider all information and make a clear decision.
There's lots of great ideas and tips in that conversation, so go back to episode 57 and take a listen. Okay, don't forget to contact me if you want to find out more about the Property Developing Mentoring Program. Email justin@propertydeveloperpodcast.com. And you can catch my site demolition update video on Facebook and Insta at Property Developer Podcast. Plus, lots of other news, views, and fun things. Remember, you can always drop a comment on iTunes if you're enjoying the show. And Until next time, may you come up with a bold idea to change the world.
You've been listening to the Property Developer Podcast. Tune in next time for more tips, ideas, and inspiration to take your developing to the next level. For more developing love, make sure to visit propertydeveloperpodcast.com.